The final full trading week of December concludes with a series of important economic reports. The anticipation surrounding central bank rate announcements is now behind us. However, as is often the case, the market is already looking ahead and pricing in future expectations, with the economic data playing a crucial role in shaping the forecasts. Let's take a look at the reports that will be released at the end of this week on December 20 and explore how they may affect the dynamics of the major currency pairs. You are watching Traders Calendar. Inflation is one of the most crucial indicators of a country's economic health. Price increases are the primary factor for the central banks when adjusting interest rates. And in this regard, Japan's annual inflation rate is said to provide a welcome pre-holiday surprise for the Bank of Japan. Consumer prices are expected to rise from a 2.3 to 2.5%, which could help the Japanese yen strengthen against the US dollar. On a Friday, Germany will release data on producer prices, while past and projected figures are expected to be negative. And this signals that Europe's largest economy is currently performing worse than last year. However, inflation itself is expected to rise by 0.8%, which could provide some support for the euro and potentially contribute to its gains against the greenback. However, the euro's rally is likely to be short-lived as the British pound, which could support the European currency, is expected to weaken. According to the Office for National Statistics, UK retail sales growth is expected to slow from a 2.4% to 1.9% in November. If the key driver of the country's economy loses momentum, the British pound is likely to face losses. While global central banks are focused on adjustment, they benchmark interest rates to more comfortable levels. Russia is experiencing a very different situation. The ruble has depreciated significantly, and domestic demand has outpaced the capacity of the Russian economy. In October, the Bank of Russia raised its key interest rate by 200 basis points, whereas the regulator signaled another rate hike in December, setting a new historic record from 21 to 23%. The ruble is expected to strengthen in response to this decision. On the other hand, the high interest rates have a detrimental impact on economic growth and consumer spending. The forecast for the Russia's Consumer Sentiment Index supports this view. The indicator is expected to fall from a -7 to -10 points, leading to a weaker ruble. Other important reports scheduled for December 20 also relate to consumer data. The US is set to release its consumer inflation figures. If the PCI price index rises from 2.3 to 2.5%, the dollar is likely to gain upside momentum. And traders may also take notice of the index reflecting consumer confidence levels in the euro area, which will be released during the US trading session. This leading indicator is expected to show a slight improvement in consumer confidence in December, moving from a more negative reading to a less negative one. Although still in negative territory, this improvement could help the euro gain some ground. Competing with the US dollar is becoming increasingly difficult for the euro. While Europe is lowering interest rates to support its faltering economy, the US economy is doing quite well with the Fed Reserve's high interest rates. Consumer sentiment is also on the rise, with the University of Michigan forecasting an increase from 72 to 74 points in December. And this could help the dollar end the week on a strong note. Please note that the publication times are set in a GMT+3. The next video review of Traders Calendar will be released on a Friday, December 20. We wish you profitable trading and see you soon.